Well, welcome to Markets More right here on ED Now, and it was a fairly decent session after yesterday's sell-off. The markets pretty much found ground in trade today, so scaled back above 8,000, and that was a sentiment, pretty much fixed in the rebound trade, which resonated with the broader markets as well. The mid-cap and the small-cap indices did well too, and that got reflected in the market. Then they could have bargained for better breadth, but even so, all in all, it was a decent show after yesterday's scary sell-off. We had more advances to declining stocks. But to the headlines that we got from the markets desk today, Indian markets rebound in trade after 3 straight days of decline. Nifty manages to close above the crucial 8,000 mark. Broader markets advance in trade as well. Finance Minister Mr. Arun Jaitley hints at a sustained drive to weed out corruption. Addressing BJP MPs at the parliamentary party meet, Jaitley vows more clean-up even as the focus shifts on bringing quick relief to rural areas. Latest measures aimed at helping farmers during the Rabi season. Meanwhile, international ratings agency Fitch has said that they are likely to cut India's GDP growth forecast and slow down due to demonetization. States that India October to December GDP growth will almost certainly be weak. Moreover, reaffirms the negative outlook on India's banking sector. In more voices, Modi government's demonetization move will certainly have an impact on India's growth figures in the short term, but the long-term benefits far outweigh short-term hiccups, says America's John Praveen. The leading global asset manager feels cash ban could prompt the RBI to cut rates further. He says a correction is a good buying opportunity. And from the world of commodities, Goldman Sachs has come out with a big overweight stance on the entire commodities basket in over 4 years as the brokerage firm raises its iron ore and crude oil price forecast, citing stronger cyclical environments supporting the performance of this asset class. In important earnings, L&T delivers a strong set of Q2 numbers. PAT and EBITDA beat estimates and expectations, and profit is boosted by an exceptional gain of 400 crores due to stake sale in the subsidiary. Well, those are some of course, the highlights of the session today, and all in all, it was a good session in trade, at least a relief session in the backdrop of the fact that we have been witnessing of late a lot of volatility as well as downward pressure. Voices lined up on the show to make sense of the markets include John Praveen of Pramerica International, Krishna Kumar Kalra of MK Global. We also have Jyotirudra Jaipuria of Veda Investments. We'll also be joined by Sunil Chavan on the technicals to help our viewers approach trade tomorrow, and Anand Tunnel will take us through the fundamentals. I just want to mark the question of the day before anything else, and the talk of the town really right now is, will the Nifty make a base closer to 8,000? And amidst all the volatility and nervousness, will we finally be able to close out the series with a 10% cut, but roughly around the 8,000 mark come this Thursday? Sameep as well as Anand, good evening to both of you. Anand, let me start off with you. I know you're not a technical chartist and you don't look at levels, but even so, has the market got you worried because of the way we've come out? And this has not been like a knee-jerk reaction, 10% from the top. It's been a slow and steady downward adjustment.
Well, yes, I think the demonetization move was not something that the market could have anticipated, and consequently there has to be a readjustment to the new fundamentals, which essentially is that at least near term there will be a significant slowdown because of the lack of liquidity. The question how far it will last or how long it will last is something that you cannot answer right now, and the effect of it is also unlikely to be very clear till we actually move forward, because we have not seen this kind of move in any large economy for many years now. However, if you were to kind of make a forecast, then I would argue that maybe for the most part, most of the pain should be out in the next 6 months, and you may have an estimate downgrade in the current year, but perhaps the next year's estimates may actually be pushed up a bit, given that some of the demand from this year may flow into the next. So all may not be lost. May not be lost if you are looking at a slightly longer term scenario.
So, in your own sense on the charts, was this one of those dead cat bounces which will be sold into again?
See, we have already seen a relentless fall from higher levels of 8500, 8550. However, we were not expecting Nifty to fall below 8,000, but yesterday we saw Nifty breaking 8,000 levels convincingly. However, if you look at yesterday's price action, yesterday Nifty precisely retested Brexit low, which was placed around 7926, and today we have seen a breather in the market. Going forward, if we look at the overall placement of RSI smoother on daily chart, it has already slipped into a very extreme oversold position, and historically speaking, when this particular indicator falls to such a low level, we tend to see a very sharp bounce very soon. So that is what we are anticipating. Before Nifty confirming any other further direction, we expect a minor bounce. That short-term bounce could be towards 8200, 8250, and then probably we'll reassess the situation. So as of now, we won't short the index at current level. Probably will be taking a contradictory buy call by keeping strict stop loss below 7900, and we expect at least 150, 180 points bounce from current level.
Right. Let's talk about important earnings. And Anand, what was your key takeaway from what L&T reported? There was enough to be surprised about on the top line as well as the EBITDA performance. Does that indicate that slowly but surely the cycle is returning, because L&T pretty much paves the way for such a trend in the works?
Well, I need to look at the numbers a little more, but what I heard from the management seemed to indicate that the activity is mostly in the power and oil sector. The oil is a bit surprising for me. Power is something that one could have anticipated, especially in the T&D sector, and we have to see where L&T has been getting their business from. But otherwise, of course, there wasn't a surprise in terms of the other income that already happened earlier. So, but broadly, it does seem that at least for L&T, it may not be. You may be seeing better quarters ahead.
Samit, your own sense on L&T, also BGR Energy, which reacted to a big, strong order win today?
See, as far as levels for L&T is concerned, clearly this has been an underperforming stock of late. We have seen a gradual decline from the levels of 1450, 1480, and is now trading around its strong support of weekly 200 days SMA, which is placed around 1300. So from here on, we expect a minor bounce probably towards 1400, 1420. As of now, we are seeing the range for L&T that could be 100, 120 points range, wherein the higher side level would be around 1400, 1420, and lower side we don't see the stock immediately falling towards below 1300. As far as BGR Energy is concerned, of late we have seen a consolidation in the stock. The stock has managed to correct a bit from higher levels, but overall we expect a minor bounce. That bounce could be towards 112, 115. If we have to turn positive in the stock has to surpass 115 with substantial rising volumes. That we don't see as of now. Once this stock surpasses 115, then probably we could see higher levels. As of now, 115 to 100 could be seen as an immediate range.
Stay on with us, gentlemen. You have a quick perspective coming in on the market rebound. My colleague Vivek Iyer joins me with that. Vivek, tell all.
Well, finally some respite for the markets. We've seen bloodshed across the markets, especially Indian markets. They've been severely underperforming the Asian indices as well as global indices. US Dow futures and the US indices are trading at record highs, but Indian markets actually went ahead and touched the Brexit day lows. Today, however, there was some respite. Nifty, if you're looking at it, after 3 straight sessions of selling pressure that was witnessed, what actually happened was the fact that Nifty managed to end in the green. What will cheer the markets even more is the fact that Nifty managed to close about the crucial 8,000 level. More than that, if you're looking at the Nifty Bank Index, it closed above after closed with gains after 6 straight sessions of losses. And if you're looking at most of the beaten down banks like IndusInd, Yes Bank, these are the banks that actually went ahead and led the Nifty Bank Index higher. Talking about the Nifty, it was the cement stocks and the auto stocks, most beaten down, Maruti, Bajaj Auto, etc. These are the ones that actually managed to pull the index up higher, especially in the second half.
Yes, indeed. It was a day when autos particularly saw interest. Do you think that, when the trend on consumption picks up, and perhaps that's what the market is buying into, auto stocks at cheaper levels after the sell-off for Anand, because that's where the story looks the strongest, minus this lull?
No, absolutely. As I said in my opening remarks, the likelihood is, especially things like auto, which will have possibly a delay in terms of consumption in the near term, may perhaps benefit next year, and therefore to that extent, if you get them cheaper, they will obviously attract buying. a stock like Maruti, for example, which has very little other competition in terms of four-wheelers, at least in the listed space, and which already has a backlog, and therefore you are more or less, a little more comfortable in terms of the earnings that they can report, will obviously be something which is more attractive as the price falls.
Stay on with us, gentlemen. We'll take a short break right now. As we do so, here are John Praveen of America International believes demonetization is to impact India's Q4 GDP growth as well as earnings.
This shortage of cash will probably have a negative impact upon consumer spending and probably trim GDP growth by maybe between half a percent to maybe 0.75% in the fourth quarter. So in the short term, it is going to have a negative impact, and I think that the market action in the last couple of weeks probably testifies to the negative impact that is going to come about in the next in this quarter. But beyond this quarter, if you look at the next year and all of that, there may be some silver lining to the clouds, in the sense that this might probably prompt the Reserve Bank of India to cut rates further. This may also increase the amount of liquidity in the banks. In general, we still have a constructive attitude towards emerging markets, and within emerging markets we have had a constructive attitude towards India. But once there is a little bit of stabilization in emerging market space, I think that this particular correction would be seen as a buying opportunity.